Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 3rd, and a bit of news today. Tomorrow will be more volatile. We got the jobs numbers reported by the Bureau of Labor Statistics come in, but we will start out with the weekly jobless claims. And last week it was reported 406,000 people applied for unemployment. We estimated that to come down maybe only about 400,000. And we got a magic number at 397. So we dipped below 400,000. As we said, it's kind of a psychological number. Anything about below 400,000, the investors like to see that because they're hoping, of course, feeling optimistic that maybe it might become a trend. So again, we got 397 today's reports. Next item of economic news release is the productivity. These ones aren't real huge, but just something to just report. Uh, Last reporting was at negative 0.1%. This, of course, is for Q3, third quarter. We figured it would be up to about 3.7, and it did rise up a little bit, up to 3.1%. So that's pretty good. We got unit labor costs also for third quarter here. It was up at 2.8% the last report. We figured it would drop down to negative 0.14%, and it actually dropped down to negative 2.4. So, basically what that means is cost of creating productivity. Of course, we saw productivity is going up. Part of that's also the costs were cut. So you're getting by with doing more with less is, I guess, really what it comes down to. Also, ISM services. This is for basically non-manufacturing. We had a 53.0 report the previous, and we thought it would go up a little bit and actually drop. So that was obviously not good news. We would like to see that go upwards a little bit. So basically, this is saying non-manufacturing jobs aren't doing as well right now. And then factory orders, we had a 0.1% the previous reports. We thought it would drop a little bit and actually went up a little bit. So that's actually pretty good. So we kind of have a mixed bag of news reported today. So factory orders looks pretty good. Jobless claims came in a little bit better. Uh, Productivity unit labor cost came in. So really ISM services is about the only one that if you're going to say anything negative might be ISM services scheduled for today. So let's jump over to the headline news. And we got the stock market's up today. As I mentioned, we got a lot of more positive news for the stock market than negative news. But of course, some of the biggies is Greece. Rumors of Papadopoulos resigning. Also, the EU, Germany, and France basically are saying no, we're not going to give you any money until this referendum issue is now resolved. And then also there's talking behind the scenes that maybe there might be some the EU might be fed up with this and just kick Greece out of the European community. So that might be an option too. So we may see something like that play out. Another item to note is European Central Bank cut its interest rates from 1.5 down to 1.25%. So with all that news, basically, at least with the ECB cutting its interest rates, the investors are kind of liking that. They're still kind of pricing in the stock market is kind of based in with the Greece, but that's kind of what why the stock market's up. Mostly ECB cut interest rates and some of the other positive news from the economic news. So let's see how this is playing out with the bond market and how this is affecting the bond market and interest rates. As we see, is we're up a little bit for the day, but we did start downwards a little bit. Here we are today, and we did start down here. We're up about 15 basis point currently. Now we had this gap that I talked about a couple of days ago that we opened up upwards, and yes, so we started closing it, and it looks like today we're kind of closing it further. Now the question is, are we starting a downward trend because of this? As we see, the bond price is lowering, which raises interest rates. So right now, interest rates are a little bit higher than where we left off yesterday, because obviously we're a little bit at the 102 versus 102.22. And so this is going to be a question is, are we in a downward trend or are we just kind of closing a gap? Tomorrow could be a big day. Again, they're expecting only 90,000 new jobs to be created. So if it comes in much less than that, we could have a spark a rally in the bond market. But I'm not sure if that's going to be big enough for with today's to really kind of offset that, as seems to be Greece is on everybody's minds these days. Also, we can't forget about this gap here. We still haven't closed this gap as of yet. As I mentioned at that time, is as soon as it can, we get the rates go up, as soon as they can come downwards too. So if we have a good jobs number, this could easily drop downwards to about the 101.50 range. So we might have a little bit of support right around this level here. So we might have low support here. But again, we do this gap will probably be closing up at some point too. May not be now, could be weeks from now or whenever. So, but this is something to watch out for. So interest rates are a little bit higher today versus yesterday, but still very good. Not a huge change or anything. So stay tuned and check out my offering for you.